Hi guys, it's CryptoBirb. Adrian speaking. Welcome to today's Friday webinar. Lots been going on the macroeconomic side. Aside from the fundamental changes and uncertainties for the Russia-Ukraine war, we've just got the Fed's announcement and Jay Powell, the chairman, announcing 0.25% BPS, 0.25 BPS basis points increase on the rate hikes, right? So the Feds actually delivered what they promised. And we're going to have a look today for how potentially market may react further down the path to the rate hikes. We're going to see, through the historical records, to see a little bit of an evidence and lay out certain scenarios for the next days, weeks, especially that it's a very, very exotic day. Today, they only have 4 Fridays like that in a year. We are going to discuss the triple witching closes. Make sure, guys, to stay tuned. We are going to go and discuss all of that in a second. Hi, everybody. Once again, there is no sound. Okay, it's strange. I think there is sound. Okay, mixed comments. Please let me know, guys, how you are doing today. If you can hear me, if you can see me well and clearly, so we can proceed and continue on what's the most relevant discussion for today, for today's webinar, right? So please let me know how you guys are doing. I think my mic is on. I think all my settings are on, so you should be all good and clear for the way I sound, for the way I look at least. So yeah, lots been going on. Okay, great. We have some people coming up into the chat. I think as always, there's a couple of seconds of delay between what I say and what you actually hear on the broadcast. So make sure to keep your eyes open as well, to keep your comments, to keep your questions coming into the chat, because I'll do my best later on to commit a couple of minutes to go and rush through some of these questions. This is special day. This is very special Friday, and I really mean it. There only have 4 Fridays like that in a year. We are talking about triple witching Friday. But before I jump, and then explain straight what that is and what kind of implications might have for the near term and the medium term and long term kind of market performance, I want to go through a couple of points, right? So starting off, like I said, the Federal Reserve approves first interest rate hike, right? In more than 3 years, ever since 2018, to be honest, seeing apparently 6 more ahead, regardless of what they promise. The Fed is actually known to have not delivered many on their promises before in terms of the rate hikes. This is often some sort of a tool of theirs to impact the way that the financial markets behave. From the most important key points, we are talking about 0.25 percentage point rate hike, right? So 0.25 BPS basis points rate hikes, first increase since 2018. Okay, indicating an aggressive path ahead with the rate rises coming at each of the remaining 6 meetings in 2022. This is what they have announced. And Jay Powell, the chairman, Jeremy Powell, actually was, was quite, I should say, rigorous. The overall conference was to make it seem that, that they are cold-blooded, if you will. But the truth is that behind the scenes, they are dealing with a lot of market tumbling. They are dealing with a lot of recession-like threats, right? So, like I had said, earlier before on the previous meetings, on previous webinars, interviews, the Fed, needs to be very cautious about the rate hikes policy, because overly tightened policy may actually, cause some sort of cascade events, series that will lead to a proper recession. And recession is not necessarily a good time for the politicians, especially accounting the midterm elections, right? Because 2022 is the year of the midterm elections. So this is a proper recession is the last thing that the federals would actually want, that the Fed will want, okay, the Federal Reserve. And Based on that, we have noticed per the Wall Street Journal records, we have noticed a little bit of somewhat of a positive upwards reaction to the markets, right? So first of all, when the rate hikes after the FOMC meeting came in, you saw on the announcement time, on the announcement minute, when the headlines hit the market, you actually were looking at somewhat negative downfall, on the equities, on the S&P 500 large caps, which later, after local, tumble, it actually later managed, okay, to, well, not only to climb up, but to actually follow through to the upside with a proper breakout retest, okay, and continuing into the, today's sessions, right? So we are talking about, S&P 500 kind of like reacting at first slightly to the downside, then following through to the upside with a decent kind of like, pump, if you will. Yeah, right now trading at around 4%, somewhere between 3.5 and 4% on the return, right? Yields, as you can tell, initially, of course, we're kind of like, just trading higher a little bit. The yields went spiking through 224% to 225%, and overall remaining in a lot of noisy chop. Okay, while crude oil, as you can tell, well, after a heavy blow off top locally, okay, you are looking at somewhat of a decreasing reaction as well to the rate hikes initially, but then later actually recovered and pulled back to the upside, right? And the dollar index seems to be actually the this is a little bit different than the DXY, right? This is Wall Street Journal dollar index. So we're going to actually have a look to the proper DXY in a second, US dollar. But it's been in somewhat of a decline, right? It's been somewhat of a decline. And on the Russia-Ukraine side, I think we need to always acknowledge that, that there is a lot of uncertainty going on in terms of the fundamental factors, right? Of course, we know, at least per the media reports, that there is basically so much misinformation going on, right? You never truly know how it's really going, on the side, because, Russia would put out their own narrative, Ukraine will put on their own narrative. So I'm of course not picking either side in here in terms of who is right and who is wrong, because it's always hard to guess what is propaganda or what is not. Of course, it is clear for who is the invader, but this actually brings high and long-term implications, right? Like I said, with Russia invading the Ukraine in a very very ugly manner, this had a very strong impact on the equities. On equities, on stock market, on the commodities as well, especially oil, right? As Russia is one of the main players in the oil scene. So, before we go to further details, I just want to give you a quick heads up for how the markets have reacted in the past to the rate hikes. And the rate hikes we are talking about, here is somewhat of a yearly performance, right? Or approximately year performance, if you will, right, based on the source of the Dow Jones market data. I think it was taken out of Forbes, but basically it tells you about this medium to long-term reaction on the industrial side, right, which is here, on the S&P 500 side, on the tech, on the Nasdaq side. And as you can clearly notice, practically each and every single time outside the dot-com bubble, which is basically this red field, right, the rate hikes have had more bullish than bearish reactions or impacts on the markets in the near or long term, right? So we are talking about overall increase or averaged change, for Dow Jones Industrials out of all of these kind of like, rate hike cycles, right? 1994, 1995, 97, 98, dot-com bubble, 2004, 2007 rate hikes, cycle of 2008 recession into 2011, okay? And you can tell that it averages actually around 55%, right? Almost 55% of the increase of Dow Jones Industrials over the course of the years, accounting all the rate hike cycles. S&P 500 averaged up to almost 63%, and Nasdaq is the talk more aggressive, more risk on, more volatile index actually, or the exchange get you gets you at around 102, 103%, okay, average, with a median change, the most repetitive kind of like a result out of the poll being 17.4% for Dow Jones Industrials, S&P 500 returning the median of 30% and 26%, 27% almost, on the long-term side for the Nasdaq. And short-term, historically, you can tell that on the day, on the next day, basically on the day of the rate hikes, that was followed, you get accounting the averages, right? You get basically the 0.4 on the negative side percent, 0.3 as the median change, almost 0.1, 0.9%, okay, on the returns. So on the S&P 500, 1 month return, right? So this is 1 month return, this is 1 day return, and historically, going through the rate hike cycles of the past, or for the most recent rate hikes and incidents of the past couple of years, the past instances, you are looking at somewhat of a short-term, more bearish or neutral reaction, right? So this usually brings some sort of like a short-term bearish reaction across the markets, across equities, which is something that you also saw, here in the chart from the Wall Street Journal, right? Something that I was referring to, that initially kind of like tumbles down, and then on the day after it usually kind of like recovers a little bit at least, right? So that being said, I want to let you guys know that it makes sense to expect sort of medium to long-term bullish reaction to it, at least historically speaking, accounting the previous rate hike cycles, right? It doesn't happen too often, but when it comes, usually need to wait a little bit over a month, usually need to wait the near term and to long term kind of like reactions to see some decent returns, right? And the proper bull market, this secular bull market continuation, right? While with the short-term results, it does make sense that it's not perfectly kind of like just set for growth in the short term, medium term, or near term. And back to the Russia-Ukraine side, war. This is a kind reminder, only just a kind reminder, that I, along with CryptoBanter, with Runner, Metaverse Capital, and other friends, kind of like founded this NFT project that basically raises the funds for Ukraine, right, suffering from the war, from Ukrainian people. And there is a collection. There are many beautiful artists that are actually sharing their arts. So I kindly encourage you guys to keep monitoring these, to keep following this, because each and every single cent raised on the collection is going to be publicly and transparently donated via blockchain with cryptos. All 100% of the funds are going to be donated to Ukraine, right? So you're going to be able to track it. And we don't get anything out of that. This is non-profit project funded kind of like on the day after we kind of like decided to go and push for it. So it is someone funded on the spot, decided, okay, guys, let's go. This is the time. Let's use our influence on on Twitter. Let's gather up some people to help out the good cause, right? To help out the Ukrainian brothers of ours. So like I said, there's lots of beautiful collections. I'm going to actually bidding them myself to win the auctions, and each and every single auction won, the funds are transmitted, like I said, transparently and publicly will be announced to transfer and donate it to Ukraine. So with that, make sure guys to follow AAW NFT with the underscore AAW underscore NFT. This is something that I want you guys to do to help and support good cause. If you don't want to participate in the action or donation, just put a follow, and press like, share, so the others can help and see. I appreciate it. And back to the game on the markets, right? So we are talking basically about short-term recovery, or I should say even a little bit more decided to the upside. It's not even the recovery, but we are talking about a proper breakout, right? So you're looking at a set of proper breakouts here, on the composite on the left side, on the S&P 500 large caps on the right side, right? We are talking about the breakouts through short-term daily 20-day averages, right? This is basically somewhere between, this is still a short-term average, 20-day average, technically anything between 3 weeks, so 21 days, and 3 months, which is approximate of 90 days. You get medium-term reference, and anything above 3 months is typically a long-term, right? Anything below 3 weeks is typically short-term. So it's fair to call this medium term, this mean 20-day average, a short term curve. And knowing that, we've seen the breakout through the average, we've seen the breakout on ever since recovering off 1250, 12500 lows. Right now trading at 13, almost 800, so it is proper increase. Sorry guys, but the nose is just, my mustache is literally scratching now. It's insane. Cheers and shout out to all the beard guys. We are looking at attempting after the breakout, somewhat of a short-term resistance positioned at around 14,000, points on a scale for the Nasdaq Composites, while there is already an advance of a stronger momentum, a stronger recovery relatively, with S&P 500 reverting back to its mean, to its 50-day mean, which is basically this red curve, right? So 50-day average is actually mean reverted right now. The price action of the S&P 500 or the large caps has already recovered its lost pressures, at least to its fair value, because this 50-day average is what gives you a round approximate number, average number for the fair value accounting, where the index here should be presenting and accounting the past 50-day period. Okay, so just about to do the same, most likely follow up and follow through to the upside on the composite index. We are seeing a lot of bullish reaction as well, and bullish momentum increasing by the histogram flipping positive, which represents the bullish crossover to the upside of a faster average over the slower average of the moving average converges divergence, so MACD. And this basically confirms that there is a momentum behind it. We're seeing RSI of 14 past periods increasing to the upside as well. So it makes sense to believe that this actually might have been the bottom, at least in the short medium term, the way I look at it, right? The way I see it. Should we actually follow through to the upside and retest, reclaiming the lost 50-day average, it does mean that a 50-day average is weaker than the price action, that the price action of the Nasdaq Composites and of the S&P 500 is stronger than its downwards oriented 50-day average. So this is a bullish breakout in such an instance. So if you see a proper breakout to the upside into the area I previously talked about, 14,000, 14,500s, you are likely looking to a proportionate 50-day reversal, right? So 50-day average is combated, 50-day average is broken to the upside. This makes sense to anticipate the span of the movement of the reversal, at least for the near term, at least for the medium term. Makes sense to expect it for the next 50 days, right? After decent retracement, almost falling into the bear market category on the 22% decline, peak to the bottom, peak to trough on the composites, or 15% almost peak to trough, on the S&P 500 down to 4100s lows. It makes sense to see at least somewhat of a bullish retracement to the upside, and this is what the composite index and this is what the large caps actually are showing to me, right? So lots of bullish momentum. It's not really a fake movement. You see a lot of initial bearish tensions, bearish pressures coming from the rate hikes announcements being recovered, and the market actually getting stronger and it is backed by the momentum clearly. Okay, so should the market present itself with the proper breakout to the upside through its 50-day average fair value, okay, for the index, and the same applies for the large caps on the right side, this makes sense to anticipate further upside continuation, potentially towards the next resistance area of 15,000 or of around 4600s for the S&P 500s, right? So I think it makes sense to actually keep watching, this chart. On the Forex, on the currency side, we're looking at dollar, which is basically tumbling a little bit, right? You're looking at somewhat of a short-term, consolidation, of course, after a very heavy increase and breakout, actually, to the upside after breaking through 97.5 on the dollar index. Okay, and after a little bit of a bullish impulse, we're looking at a contraction. We're looking at a slowdown on the momentum side. We're looking at a market actually just trying to establish support somewhere around this short-term green average, if you can tell here. Okay, but it makes it impression. It gives this impression that it wants to go lower, a little bit. Okay, so perhaps we are talking about this somewhat of a short-term, retracement down to this longer-term average of 96.5 as of now. Okay, if we're looking at the Australian dollar Aussie, it's actually showing somewhat of a strength with a decent breakaway gap, here at the open through its long-term average on the daily chart. So it makes sense to expect somewhat of a bullish pressure. The British pound is basically retesting its breakdown. Okay, as of now, the averages are all kind of like turned down. So there is a lot of bearish momentum on the side, and the bears have been in the control over the past couple of weeks and months, if you will. And should the market manage to reclaim, the broken support, it should actually, let the market unfold technically towards its higher average at around 134, 135 points on the scale here. And if I were to give a Japanese yen, okay, the Japanese yen actually here was, for the currency index, it's actually seeing somewhat of a decrease in here, right? So we're looking at a somewhat of a strong breakdown, right? With a gap down at the breakaway side, another gap down on the breakaway side. It perhaps, just maybe because this is an active session, it makes sense to actually pull back a little bit, if we were to apply the technicals to it. But overall, breaking through this support, generated by this descending triangle pattern, if you will, right? Talking about this chart, it's pretty apparent, after expiring somewhat of a target to the downside, it makes sense to at least present the market participants with a somewhat of a retest in the upwards direction. Okay, and if we guys want to observe the volatility index as well per the VIX, it's basically going down as the news had been discounted more and more. Of the rate hikes, right? There was a lot of elevated fear into the market, of course, piking, and with the rate hikes announcements, piking with literally picking up and piling up with the Russia-Ukraine tensions and war going on. And after the news was announced, so with the same day, there was a strong decrease on the VIX side, which tells me that because this is a fear factor, of implied volatility of 30-day options on the S&P 500 side, this represents the implied volatility, how investors feel about it, right? Not the market past volatility, or not the market volatility per its performance, but rather implied volatility, the one that is perceived in the eyes of the investors 30 days ahead, right? So we're talking about something like a calming period, where people and traders actually take it a little bit less scarily, right, if you will. This is a little bit soothing, perhaps, on the fear side. You see a lot of ease coming out there, and potentially maybe another chunk of the downside coming down to around 22 points on the VIX scale towards the longer term mean reversion levels. Okay, speaking of the commodities, well, it's naturally led by the energy sector and precious metals. So you are looking at a strong blow off moment, going on for, for the commodities understood under the BCOM index, but truly speaking, it's under CRB, Commodity Research Bureau Index 2. It's under GSCI, under Goldman Sachs Commodity Index. Whatever you apply, you're looking at a strong decrease, mainly caused by the recent blow off top, at least locally, on the crude oil side, right? At the same time, gold, was taking a pan down as well. Silver is actually remaining a little bit flat, like the silver keeps doing this way, for some time. This is what we are used to. But this potentially, short-term setup of two gaps, actually three gaps, gap up with a strong momentum pressure to the upside, gap down out there with some sort of like a hanging man candle or a evening star reversal, kind of formation, and another gap down, or this can be perhaps on some lower time frames read as an island reversal pattern, right? Island reversal, where you kind of like are looking at some sort of like, consolidation, bullish gap up, right? And another day, bullish gap down. So you have this proper island kind of like, just standing out there. But here, the way I'm looking at it is that this tells me that at least for now, there is a strong reason for market to keep retracing further down the path, right? Of course, there's a lot of fundamental uncertainties on the commodity side because Ukraine and Russia are both, dealing a lot with the commodity side. So any tensions on one side or another actually, are causing here and there some sort of like shock supplies. We saw this shock supply, for instance, with the wheat market, right, where Ukraine was one of the main wheat producers, and with the bombing, with lots of threats, the perceived value of wheat actually increased, the demand increased because of the potential threat of a supply shrink out there, right? So this definitely has an impact on the commodity markets, and whatever happens in there, I'm not able to tell you what Russia is going to do in the next 5 hours, how Ukraine is going to do it in the next 5 hours. I have no idea what's ahead of us. I have no insights or no information about how this war looks like from the inside, right? And this is actually what is causing right now the major reversals and major movements, right? So it's somewhat of a kind of like a little bit delayed view and perspective that you guys have to be aware we all have about it, right? Quick check before I continue. Please let me know, guys, if you can hear me well, if you can still see me well. Please kindly remember to actually leave it, hit the subscribe button. If you guys have just joined on the channel for the first time, hit the subscribe button, smash the likes, leave some kind comments as well. Keep your notifications turned on, the bells on, because every day we have some new content, new video, new tutorial coming up for you. And before we go to the Bitcoin side, please let me know, guys, if everything that I'm just sharing is so far well received. Okay. Martat says, oh, well, okay, let's go. Let's keep it coming, right? So, like I said, this locally, this is the daily chart. Monthly chart looks, of course, beautiful. Aside from this very current candle itself, right, showing somewhat of an intra-month volatility to the downside, with a proper rejection of 137 highs. But we are still talking about being at the levels, unseen since 2013, 2014 levels, right? Breaking through the major resistance X support that, once the support is lost, it acts upon these polarity change principle in the technical analysis parts. That would tell you that broken support becomes resistance and broken resistance becomes the support. So it makes sense right now to at least expect some sort of like a consolidation, perhaps a little bit of a wider consolidation, towards the previous highs at around 106, 110 points. Which is exactly where the support is. The support defined by the 50-day average, right? This is this exact level, 110 points. So I could see some, of course, assuming this is just technical analysis taken into consideration, potentially some regular ABC correction, A wave, corrective wave, B corrective, and C corrective before we actually unfold further commodity continuation of the rally to the upside. And moving slowly and gradually towards Bitcoin and crypto, I guys want to get you a proper full coverage on how Bitcoin has been correlated to gold as well, right? And you can tell that quite often over the course of the past weeks and months, gold, whenever Bitcoin was actually going down per this reddish curve, we have the gold, which is climbing up at this time, right? Whenever Bitcoin actually just dumped, gold increased in price. Whenever Bitcoin pumped, gold decreased in times, right? So there is a lot of dynamics to it. It never stays really the same change, the same way. It changes over the time. You see seasons where gold's going down and Bitcoin's going up. You see seasons where Bitcoin tops and gold bottoms at that time, right? And you occasionally see some short-term moments where actually gold goes up and Bitcoin goes up, right? But the dominant tendency for the past couple of months, ever since Bitcoin has started consolidating for a year, seems to be more negative than positive on average, to me at least. Well, what does that mean? It means that gold and Bitcoin work kind of like neutralize themselves, right? As in, Bitcoin is not apparently considered by the investors in the investors' eyes as a hedge against inflation as of now, or as a hedge against war and uncertain times, right? Gold, the good old gold, actually keeps winning here over Bitcoin, as Bitcoin has been glued, like it or not, more to the to equities simply. So here, after local, like I said, blow off top on the commodity side, with oil dumping, with gold dumping, rejecting the retest areas of the all-time highs at first, which is not really surprised because more often than not, each all-time high first attempt to break through it makes sense to at least give some local rejection, let it consolidate a little bit, right, in this local area of support, and then perhaps get yet another one or two attempts to break out. But like it or not, to me, gold is rather bullish. Same silver, commodities are unquestionably in this long-term bull market. Okay, there is no question to it for several reasons, but more importantly, mainly because the 50-month moving average is strongly carving up ever since the breakout a year ago. Okay, where I was actually just talking and being kind of like loud about this breakout, where the 50-month average was actually broken to the upside. So I hope you guys, follow right. I was referring to this chart. Of course, the 50-month moving average, like to me, some charts. I have some of these charts actually in my head. But I realized that not all of you remember, but more often than not, like I said, Bitcoin stops, came up with the gold bottoming process at that time, except for several instances where Bitcoin was actually going up, gold was going up, Bitcoin going down, gold going down. Okay, so at times this correlation flips, positive, and the markets, both Bitcoin and gold, seem to follow the same directions. But over the entirety of the past year, since Bitcoin has started consolidating, it looks as if gold and Bitcoin have both been more often than not negatively correlated towards itself. Okay. I guys wanted to get you some proper understanding about the triple witching Friday, which is today, and we are talking about this very significant close to the markets, which only happens 4 times in a year. And by triple witching Friday, we mean the combination of a daily, monthly, and quarterly futures expiry, right, or weekly, whatever you give that. But you only have 4 quarters. You only have 4 instances of triple witchers, right? You only have triple witches occurring, four times in a year, which is the third Friday or of March, third Friday of June, third Friday of September, and third Friday of December. Okay, this marks the expiry of options and futures. And each and every single expiry of options and futures means volume increase, as a lot of contracts are getting closed, right? Closed contracts, covered contracts, mean there is volatility increase as well, right? Because some positions are simply expiring. Some positions, some options are expiring worthless, some positions expiring, on the money. And with the futures closing too, it generally brings a lot of volatility. And volatility means risk, and risk means exposure to danger, right? So during such volatile times that you only have 4 of these in a year, in a trading year, it makes sense, usually more often than not to get overexposed to risk on assets. As in, this may not necessarily be the best day in a year, the best timing in a year for traders to open up 10 and 20 different altcoin positions, or 10 and 20 leveraged, fund positions on the ETNs, or just going all in deep, in some penny stocks out there, because it happens that whenever this volatility kicks in, right? Whenever this volatility kicks in, uh, there is a lot of chop, there is a lot of liquidations, there is a lot of clearing in the market, there is a lot of uncertainty, which comes from not necessarily inside of the market, but rather from as a forced result. Okay, this is not coming directly from the correlation, or I should say relationship, between traders as myself and yourselves, but it rather comes as a result of forced external, factors, just simply the way that the exchanges operate and the way that the derivatives markets operates. So a lot of volatility should come as we are nearing into the close, which is basically, to the best of my memory, 5 p.m. Eastern time, which is, well, I think in 2-3 hours from now. But one way or another, like I said, this triple witching Friday comes today on 18th. Okay, and we are talking. Well, for the just for the record, let me quote it: the financial market movements can be erratic on days when options and futures contracts expire. This is especially true on triple witching hour days, quadruple witching hour and of quarter days. It is therefore recommended that you trade on the that you not trade on the third Friday of each month in yellow calendar, right? Uh, in yellow on the calendar. So here more often than not, like I said, you're looking at the very um, intensified, elevated volatility, which does not work really in your favor, because if you're a short-term trader, then there is a high chance for you that you're going to get stopped out of your positions, right? This is also what I actually gave for well the recent for the recent announcement, right? In my free market reports that I post publicly out there, on our blog, by the way, because before you start asking how to get it, you just need to go to thebirbnews.com. It's a free blog, and here on top of the tab, you get the blog tab. Okay, and on the blog with the updates, there are so many market reports that I guys keep covering each and every single week, many days in a week. And recently, like I said, I brought this expectations of mine for the FOMC conference, which actually was already passed. But right now, triple witching Friday, there are only 4 triple witching days in the year of this kind. Those are the third Fridays of March, June, September, December. This could imply volatility and risk spikes. Just like I said, makes sense and not to be overexposed to high risk positions around that time. That marks expiry of the monthly and quarterly futures and options. This is usually volatility generating event. It makes sense not to expect increased volatility as the market is nearing towards the weekend. This is true. This is something that I had brought. And let's quickly have a look. Let's quickly have a look how Bitcoin, how Bitcoin has been actually responding to it. Real quick, we're looking at this. At this chart of a long-term Bitcoin's price action weekly chart with the 50-week average, and the correlation coefficient on the bottom as an indicator showing you how attached Bitcoin is to the large caps, to the S&P 500, right? The correlation coefficient changes from -1 to +1 on the positive side. The correlation cannot get larger than 1, cannot get lower than -1, which is the perfectly negatively correlated, combination, as opposed to perfectly positively correlated correlation, which can only happen when you compare two of the same assets, two of the same charts, right? Otherwise, for Bitcoin right now at 0.62 on average, this is a 20-week average, 20-week correlation coefficient accounting past 20 weeks, which basically tells you that ever since 2022 started, we are looking at a very elevated and very highly pressed, increase in the correlation, right? So ever since 2022 started, we are talking about a heavy correlation intensifying and growing of Bitcoin to S&P 500. What does that mean in practice for Bitcoin? Well, it means that in order to know where Bitcoin is heading, we need to account for what equities are doing at this moment, right? Because apparently the correlation, the importance, the significance of Bitcoin has been more and more dependent on equities side. Okay, so long-term chart, long-term wise, I'm still of course expecting my positive breakout to like through $100,000 resistance, with Ethereum going through $10,000 or $20,000, or Litecoin going through $1,000, etc. I'm still expecting this ultimate out season coming up, but apparently it's just a waiting game right now. I was of course wrong about the timing on the markets. I had been anticipating the reversal to come as a more restrictive kind of like formula by the end of the last year, which it did not come, right? And instead we are still looking at one of the same range bound movement, which has been happening for over a year so far, right? This is pretty wild, guys, if you think about it. After losing 50-week average for a moment, right, we are trading right below it. We are actually consolidating on the local side before we go into the lower time frames. But having lost this 50-week average itself is not necessarily a good sign, of course. But the way I read it is rather lack of momentum or loss of momentum from the bulls, which is very apparent because the price has been oscillating down and up, right, for the past year with no consequence, no breakout to the upside, no breakout to the downside, no consequence in the movements. It's just been chopping around in larger or smaller movements bounce, as opposed to the very volatile but very strongly pressing to the upside 2020 year, right? 2022, 2021, and 2022 so far, year to date, have been off nothing but consolidation. And so far, it's been consolidation below 50-week average. Typically, it's short term bearish. We've seen a lot of volatility, $40,000 range size. It's already twice as large as the entire Bitcoin's history, towards the all-time highs of 2017. So it's monstrous range, although we do not see that in this logarithmic chart scale. But the correlation is strong, so stocks need to be accounted for the price action. And if there is a lot of uncertainty in the stocks, a lot of downside volatility on the stock side, there are high chances still for a lot of volatility to downside on the Bitcoin side as well, right? At least accounting past 20 periods, past 20 weeks. If we go down, or before we go down to the lower time frames, I just want to acknowledge that we are still missing this fifth wave of value, right? We're talking about basically the first wave, which initiated the bull market breakout, the second wave corrective, which got a little bit deeper because of the unpredictable event of the COVID crash. Like charts never going to tell you when there is a COVID pandemic coming. So you need to account for this unpredictability. The third wave, which was the entire 2020, ever since March towards the end of the year, and peak in April of $65,000, $28,800, $69,000 highs, $33,000 highs, right? So we have the high, low, higher high, and a high low so far. So if anything, we're talking about still a bull market continuation, although of lower momentum, right? But typically, more often than not, uh, we have the free motive wave. So it makes sense to still anticipate and count for the positive unfolding of the pattern. At least that's the way I look at it. As we talk, I didn't notice that, but as we speak, Bitcoin actually broke. It was breaking through the major local resistance, and it makes a lot of sense. Like, this is the chart that actually dropped on Twitter. It looks to me a little bit similar, not because of just the pattern itself, that this is a triangle, right, and this is a symmetrical triangle as well, but rather in terms of the sentiment, right? The sentiment is so bearish. The sentiment is so bearish. If you go to um, look into Bitcoin, measures for the fear and greed indicator, this is basically what also kind of like indicates a lot of chances for this reversalish, this bottomish kind of like filling, right? Crowds are extremely depressed about Bitcoin's sentiment, about Bitcoin's position in the market, either having lost their hope fully, or they are just basically, waiting on the sideline. But it makes sense that more often than not, historically speaking, from current levels, the fear and greed index on the sentiment side, Bitcoin has grown or recovered stronger. So it makes sense to expect some sort of like a bottoming process. I'm not going to tell you when it's exactly going to bottom, if it's going to be in the next 5 minutes, next hours. But apparently, this triple witching Friday so far has been rather bullish than bearish for Bitcoin, right? This is a positive sign. If we apply the Barbicator Pro indicators, which is the personal trading system of mine, I often like to look at 12-hour chart and something that is called a CTF trailer, right? Aside from this is the most frequently used option of mine, which basically adjusts to the volatility into the main pivots. Okay, this is one of many indicators, and you can tell that before we had this local breakout to the upside for $40,000, we had remained under the bearish control, not necessarily in the bearish, trend per se, not always, but because sideways is not bearish, but you were looking at the bearish control, like the bears had held the control over the market until the $40,000 breakout, which happened. Then there was a lot of chop, swinging back and forth with a lot of ranging tradition, with a lot of ranging trajectory, I should say. And right now, if you actually zoom it in, right, you are looking at a very promising setup of continuation, potential local rebound, and continuation, some sort of like a bull flag maybe. But most importantly, the main retest of 41,590, which is the most important resistance gauged on the automatic adjustments of the B probe, accounting the main support and resistance levels, because this is what it does so far. This orange colored rectangle box, representing the volume backed price action territory, shows off and proves to be a support. And as long as it does this $40,000 kind of like a region, it makes sense to expect this compression, to result in an upwards breakout. And when it does present the positive breakout to the upside, with when you see a daily close basically through this level, 4150, the bulls managed to regain the upper hand, right? And it doesn't mean necessarily it's going to literally break up and shoot up like there's no tomorrow and virtually go up like vertically, but instead it means that bulls regain the upper hand, that the bulls regain the control. Okay, the bulls take over the control from the bears, and if that happens, this potentially, personally, I read that as a long signal to me, right? But this is mainly because this is adjusted to my personal trading strategy and trading system as a position trader. If we have a look very quick before I guys open up to some of your questions, which by the way you can get coming in the comments. Keep the questions coming in the comments. I'll try and do my best to actually cover at least a couple of these. But having a look at Bitcoin related to altcoins, right? We're talking about this orange curve of Bitcoin and the upper black curve of altcoins. You can tell there's been somewhat of similar tendencies going on. You can tell there's been a little bit, downwards oriented, kind of like a pattern of descending triangle, which is right now somewhat of breaking out, right? We are looking at this altcoin market cap breaking out of this bearish looking continuation, potentially downwards continuation bearish pattern. But remember that any chart pattern, right, regardless if it's descending triangle or if it's ascending triangle, which is the mirror-like kind of like pattern, or symmetrical triangle, or head and shoulders, right? Doesn't matter what pattern that is. It is a sideways form of a movement, and every sideways is more neutral, right? And it's neutral itself, and it depends on its unfolding and direction depends mainly on the context, right? So here, like I said, we're looking at somewhat of a positive reaction on the altcoins, going through definitely heavy time and heavy decreases. Bitcoin seems to be actually again, just trapped in a little bit of this, like I said, this ascending triangle pattern, maybe more closely, but a proper breakout through 46,000 dollars is a proper reversal confirmation to me, which potentially may take us towards $50,000 on the left scale, towards like $55,000, towards $60,000. And the higher we go, the higher the chances are that we are going to see new all-time highs, right? So I have not given up on my hopes or on my plans, I should say, for Bitcoin, for altcoins. At times, you just need to wait a little bit longer than you wish you would. And this has been the case, right? Charts do not tell you when Russia is going to invade Ukraine. Charts do not tell you when Elon Musk is going to tweet or joke about Dogecoin or Bitcoin. Charts are not going to tell you when the Fed or any other tax authority on somewhere on the planet is going to admit the crypto laws, and so on and so forth. So technical analysis tells you only about what's happening inside of the market, while a little bit ignoring what's happening outside, right? While right now, it's not always the case, but right now you have a lot going on behind the scenes. You have a lot going on the macroeconomic fundamental side. You have a lot going on the global shift, because of the war as well. So a lot of uncertainty, but assuming we all don't die from some sort of like an asteroid or nuclear bombs dropping, we are looking at somewhat of a positive rounded bottom, right? The momentum seems to have broken up as well, nicely. So I am looking at somewhat of a positive potential, for reversal, and knowing that I'm still, like I said, on my plan. I still have a lot of crypto exposure. I still think Bitcoin is going to break out to the upside. I still think this is not a bear market. There is no bear market in the world. The price keeps making higher highs and higher lows. This is the definition of an uptrend. It's slow in the momentum. It takes years. Okay, it takes months until it unfolds. But apparently, it is what it is. I cannot force it. And before I wrap, the show, I want to, like I said, answer a couple of your questions, guys. So real quick, let's have it real quick. What is your look on divergences on charts, Jay Cooper? Okay, so divergences in charts, I like to look at, first of all, positive or negative divergences, right? The bullish divergence or bearish divergence. You can look, actually there is an amazing tutorial and infographic on our website, under the resources and infographics, where you have a lot of perfectly explained chart patterns, explanations, also including the divergences. You talk about the bearish bullish divergences, like I said, hidden divergences, regular ones, comparison. This is something that you guys can actually learn from, right? I'm actually going to tweet it right now. Learn. Right? And yeah, you can have a look, right? It's all free. It's all for you guys. You can go ahead and enjoy. This is, I think, very valuable tool for you out there. Dimitri, do you use my DeFi? Do you use DeFi, my beard brother? Beard bros. Cheers, man. Do you also use beard and oil and wax? Yeah, I do. Do you use DeFi? I do DeFi. I do DeFi. I use DeFi mainly for investments rather than for staking, especially when the market turns south. Because, well, when you keep adding more and more, it may happen that you keep adding until it bottoms. And DeFi tends to be very aggressive of the risk, so it tends to go up a lot, but it tends to go down and retweet a lot too. Okay, so I use it, but mainly when the market is good. Right now, to be honest, I have not really been loading up on my altcoin positions too much over the course of the past 4 months, right? So it is what it is. Nicholas, should I buy Ethereum now and hold away for a possible drop? In all honesty, I am not a financial advisor, right? So I have no idea about what your monetary financial situation is. I have no idea how experienced trader you are. I have no idea what you're going through on the emotional side. Some people are going, through divorces. Some people are going through marriages. Some people are going crazy in the markets, cannot hold any sort of like risk, um, out there. So in all honesty, I have no idea or understanding about your situation. So it makes a little sense to know what to tell you, right? But all that I can say, what I am doing, and what I am doing is I'm holding my Ethereum. I keep adding on my Ethereum, right? But to my long-term backs, I'm not exposing myself to short-term leveraged positions on a day trading like a Degen. Instead, right? When I do add it, it's not aggressive, but when I do add it, I added to my long-term positions, right? So I also want to cover one or two questions more, okay, before we need to wrap the show. Do I see a bearish divergence on S&P 500 and Dow Jones? So let's actually have a look at S&P 500 on the right side. If you see the same divergence, you're going to notice it on Dow Jones Industrials too, more likely than not. Right? Do I see sort of like a divergence in there? Well, first of all, in what terms? But there is this momentum coming up. This is a decent breakout on the MACD. Just like I said, a lot of bullish momentum flowing in there. You see a lot of breakout attempts going through the 50-day averages, so which is a medium-term relative trend and trajectory. I see lots of strength rather than weakness, right? So back again, I highly recommended you guys go and learn about the divergences. This is where you can get it, thebirbness.com/resources or infographics, and it's all there for you, right? Okay, guys. Yeah, I need to be wrapping up the show real quick. And before I do this, I just want to encourage you to learn about private mentoring, because private mentoring is one of our membership services that we had going on, since 2017, basically. And the major issue with that is that it is very limited in terms of the seats, because there are only 15 people in my team globally and worldwide 24/7 that can help you. But individual guidance, the private mentoring, individual guidance with lots of personal trading kind of like discussions going on between you and your mentor, this is very scarce and very demanded. So people always want it, but it's never, we don't have hundreds of people in the team, so it always is very limited. But there are new seats. New people have entered the team. There are new seats for you, and you can get 10% off if you play with crypto, and 10% off additional if you sign up for 4 months. So this is the tweet that I actually put in there on my channel, on my Twitter, and you can get 20% off, right, if you go for it. And besides, there is a 7-day free trial for Nest Club, which is a package lower. But yeah, guys, I hope you enjoyed this. I hope you enjoyed this. If you're interested, if you're serious about your trading, if you need somebody to help you out, with your trading ideas, discuss technical analysis, to discuss the markets, discuss trading with someone experienced and someone who can be your mentor globally, wherever you are, then come and join us on the private mentoring with discount, 10% off with crypto payments. Guys, I hope you enjoyed this stream. Hope you're staying safe out there. God bless you all, and I see you guys on the next shows. Bye-bye.